right, on to our next guest. And Pat Capital has been at the coalface of capital raisings across the local bourse as listed companies look to recapitalize in the face of fear and uncertainty. Well, MD Clayton Larcombe joins us now here at Barangaroo for the inside running. So this has been an extraordinary time in many, many ways, and for capital raisings as well. So what is it, or are there sort of confines around a cap raise that make it more interesting than others to you?
It's a good question, Nadine, and it's something we've worked through as a team for, especially this year. You know, we've seen an unprecedented amount of capital raises and different levels from the ASX allowing companies to raise more at different times. And it's had a lot of press, good and bad, but you know, I think that at the moment you've seen that companies are under pressure from obviously global situations, and the need for companies, like a lot of companies that came to market in March, we spoke about this last time, it firmed up a lot of companies' balance sheets. You know, we saw NAB, Lend-Lease, Afterpay. That Afterpay's a bit different, but the other ones, you know, National Storage, we participated in all those along the way, and it was just that the good quality companies, you know, these are ASX 200 companies that are balance sheets are rock solid. These ones are under pressure at the time and were just great companies to buy.
Has this changed significantly, the landscape, in the past couple of weeks as the world seems to have changed in its outlook? Perhaps give us the breakdown term between, you know, small caps and large caps.
Yeah, do you mean just globally how the market's changed?
Well, no, but locally, how you're addressing that?
Yeah, look, it's that top end of town is definitely, you were just alluding to then. You know, you've seen 10-20% plus returns for these large cap stocks, which you would think is something you'd see over the course of years. And smaller cap stocks, which become more volatile, they're all behaving in similar ways at the moment. You know, so we've seen Woodside Petroleum, we started to buy at $18. That's now $23.50. You know, that's seen a huge rally recently, and I think the volatility that's coming back into markets, as we spoke about, there's just a lot of money still on the sidelines that's probably missed the boat, and they sort of thought markets would pull back further than what it did. And I think there's a lot more room to go in the large cap space at the moment, rather than focusing on small caps right now for us.
But in terms of a pullback, is there an expectation that's still to come, perhaps, that before we get into next year, which everyone is so optimistic about?
I don't think so. I think that I've taken a risk-on approach across my portfolios. I think there's a huge amount of stimulus around the world that's come into the market. Companies are opening back up. There's vaccines at play. I feel that 2021 is going to be a great year.
Okay, so what do you like in the large cap space right now?
We spoke a couple of weeks ago, Andrew, about we started to, and it's a hard word to say in public, at Telstra. We started to buy Telstra stock around $3. Hasn't done a lot at the moment, which is okay. It's a long-term play. They're rebalancing their balance sheet. They're consolidating assets. There was some Foxtel news in the paper today with the News Corp acquisition. I think that company is in line for a hard word to say again, Telstra, but it's we think that's a 12-month play. Will be back to $4.
All right. Anything else in the large caps that you're looking at?
Nothing that I will have a view on right now, to be honest. Yeah, we're playing the...
Keeping your powder dry a bit, eh?
We are, but we're using a lot of managers at the moment. Yeah. You know, we outsource to companies and managers that are specialties in the space. Yep. Like L1, we started to add their long-short exposure. We're looking for more of that arbitrage exposure because of volatility at the moment. You know, we saw their LIC, which is LICs that come under pressure, LICs. You know, it's $2.30 NTA. They were trading $1.54 2 weeks ago. We're like, and I'm very close with L1, and they had a very heavy vaccine healthcare portion to their portfolio. You know, their headline fund is going to be 10+%. So the L1, the LIC was a quick 15% in 12 weeks.
Not bad. ETFs. What's your view? Do you invest in ETFs on behalf of your clients?
We do. We're very active in the ETFs, actually. We go... I've spoken before on here about different sectors that we invest in, like that esports ETF. You know, Hack, the cybersecurity ETF. They're sort of the thematics that we build our portfolios in, and right now we've looked at a different one. We really started to look at what is a sector that's been under pressure. What do we feel will come back to life in 2021? And that's infrastructure. You know, the Magellan Active ETF is a really unique play, and that's where we've started to reallocate capital. That's down 16% this year. I think that gas, airports, water, utilities, as the world opens up again and people come to life, that infrastructure is a pretty defensive play, but it's been under a lot of pressure this year, of course.
Yeah, and I see you like toll roads.
Yeah. That's hard. You know, it definitely a long way away. It's a very hard to think about airports, toll roads, you know, and especially global toll roads in Brazil, airports in China. How's that trade war going? They're all thematics that we really have to unpack. But Magellan obviously are a force in the market, and they have 20 to 40 stocks that they pick through. They're very active what they do, and they've looked at less exposure to airports at the moment, toll, but it's the thematic that I think will come back to life in 2021.
All right, and we better get your view on small caps then.
Okay,
Yeah.
Sure. So we spoke last time here about a Israel Tech. Obviously has got a lot of raps over it's come to market a lot. Security Matters was the one I spoke about a few weeks ago on here. That was essentially it's a way to barcode a product. So essentially, the Perth Mint have a contract with Security Matters. Essentially, they have a microscopic particle that goes into their block of gold to identify this is our block of gold, not a fake bit of gold or coming from another mine. And a lot of other companies have seen the value of this technology. Not just in gold, you can talk. Continental Tires are speaking about how can we ensure that this tyre is our rubber, hasn't been mixed with another rubber in our recycling process. So that was 30 cents 2 weeks ago. They did a capital raise, again, they were talking about capital raises, at 38 cents. It's now trading at 40 cents. So that was a good couple of weeks. And a really interesting part on that, which I'd like to identify, is that in that capital raise, Sagot is Israel's biggest investment fund. That is like Australian super to Israel. They have never invested in Australian stock before directly, ever. They invested in that. That's interesting.
Yeah.
SMX is a ticker code for that one, is it?
Yep.
Security Matters. Yeah, there's another company, it's called Dots, that does something sort of similar using carbon technology. I think it's pretty fascinating as well. All right, Clayton, great to have you on, sharing your ideas. Appreciate your time, as always.
Thanks a lot.